The declarations state who you are, the dates of the policy, who the insurance company is, where the property is to be insured, and it lists all of the forms that are attached to the policy by form number. The second part is the insuring agreement. You promise to do this, and the insurance company promises to do that. And it will specifically say, here is what we are insuring you for. There are conditions. These are the things you have to do in the event of a loss. It also includes definitions. And then there are a list of exclusions, and every insurance policy has a list of exclusions. A homeowner's policies, there are 6 different insurance policies. They're numbered HO1 through HO6. And every one of those policies has 2 parts. There is a property part and a liability part, but essentially all of them have the same shell of a policy. And HO1, HO2, HO3, and HO5 are all variations of the same product. They just insure the property against different perils. And HO1 being the simplest, it's a basic policy. HO2, we add some more perils to it, and they call that a broad policy. HO3 is a special perils policy with named perils on your personal property. And an HO5 is special on the house and special on the contents. The first thing we insure is the dwelling. And so this is the actual structure of the home. And the insurance agent is going to take the information about the house, where you're located, what the zip code is, what the construction of the home is. Is it all wood? Does it have, is it masonry? Does it have a metal roof? Does it have a shingled roof? And all that information goes into a computer program based on square footage and the type of construction to give what we call a costimator. This is the value to replace the home. Yeah, obviously, everybody knows that there are great concerns about the cost of inflation in building materials right now, and insurance companies are actually increasing the values of people's homes on their insurance policies anywhere from 6 to 11% or so right now. In addition to the main dwelling, some people have a detached garage. Could be a shed, could be a full garage, could be a barn. The insurance company is going to take and insure that building automatically for 10% of the value of the house. So sometimes we have to review those values and increase those. You might have more than one extra structure on a property. Personal property, the insurance company is going to automatically give you between 50 and 70% of the value of your home on a policy. So if you had a home that was insured for $500,000 and the personal property was at 50%, we're going to insure the personal property at $250,000. The other structures would be at $50,000. And there is another coverage if you are unable to occupy your house. The insurance company will put you up in a hotel or rent you another house, and the value is automatically 20% of the value of the home. So $500,000 on the house, 20% for loss of use. They'll give you $100,000 while the home's being rebuilt. There are certain things, jewelry, fine arts, antiques, collections, coin collections, antique books. I've had antique rugs, all kinds of things that we will get appraisals for, and we will schedule them. You pay to have them scheduled on the policy. Sometimes it's called a personal article floater. But what it does is it gives you an agreement. This is how much this item is worth. This is how much we will pay you for. There's no argument about the value. And there's no argument about whether it's covered or not, really. You could have a stone fall out of a ring. You still have the ring, just the stone has come loose and disappeared, and the insurance company will pay you under a personal article floater, jewelry floater, for the mysterious disappearance of that ring. The second half of a liability or of a homeowner's policy is personal liability coverage. And these things do happen. And they actually happen more often than you think. This could include slip and falls on your property. You have a guest or an invitee who slips coming up your stairs on your driveway. Could be a dog bite. It could be, I've had claims where somebody was skiing and they ran over another person. Claims where a golfer hit the ball down another fairway and hit somebody. It's a homeowner's claim. Could be a situation where you're renting another home and there's property damage to that home or a hotel room that falls under the policy. Every situation is different. But the insurance company will do everything they can to determine whether or not you were at fault. And if you were at fault, they will look to settle that claim for you. You run into situations where the claims adjuster can't settle the claim for you, and somebody determines that they need to sue you. When that happens, under a homeowner's policy, an auto policy, motorcycle, RV policy, whatever it is, when we have liability coverage, the insurance company is going to hire an attorney to defend you. And we hire that attorney at no expense to you. It's part of the policy. It's somebody who specializes in insurance defense work. They don't work for plaintiffs. And they will do their best to get the claim settled for you. There is something that everybody needs to be aware of, and that it's an automobile policy or a homeowner's policy. The amount of insurance you have on the liability side, whether it's $100,000, $300,000, or $1 million, that is the amount of insurance that's going to be available to you at the time the claim settles. So what you buy today is what you're going to have in the future to settle that claim. If the person who was bitten by a dog was a child, that claim, at least in Virginia, where I live, when the child turns the age of majority, they become 18 years old. We then add 2 years to the statute of limitations before they have to sue you. So if I have a 10-year-old who was injured, I've got 8 years before they hit the age of majority. and plus 2 years for the statute of limitations, they have 10 years to sue you. Now, and so the dollar amounts you had available at that time, but it's important. It is the amount that they're going to have available to you years down the road. And once they have sued you, it could take several years to get through the court system. The homeowner's policy also has a coverage in it that is for guests and invitees. It's a small amount of money, usually between $2,500 and $5,000, that the insurance company uses when you didn't do anything wrong. And this is an amount that they'll offer to pay medical bills. And when they do this, they use it, it's called a fast action settlement technique. But as long as somebody's having their medical bills taken care of, and they don't really want to go after a person who had invited them to their house, offering those payments can help keep bigger potential higher amount liability claims from happening. So I mentioned an HO1, an HO2, HO3, and an HO5, all variations of the homeowner's policy. An HO4 is what somebody buys when they're renting. And when you're renting a property, you don't insure the building because you don't own it. You insure the value of your personal property and your loss of use of that property, and the liability coverage, which I was just alluding to. And many apartment complexes are going to, and other landlords are going to require that you have this coverage in place in order to rent from them. There is another policy in HO6, which is a condominium unit owner's policy. Now, the condominium unit owner does not own the building. They own the airspace inside of the unit that they're occupying. A condominium unit owner needs to actually look at the bylaws of their condominium association to determine what they need to insure and what they don't need to insure. Sometimes the documents are written so that the unit owner has to insure drywall and electrical and flooring and cabinets, and sometimes the documents say that all those are included with the condominium unit owners association. It just all depends. At the same time, you need coverage for your property, you need coverage for your loss of use, and you need coverage for liability. In a condominium, we often see claims where there's a water leak and the unit below you is damaged or across the hall is damaged because you had a water leak, and that liability insurance can be used to protect you there. Again, depending upon the condominium unit owners association bylaws. But what determines the price of these things? The age of the building. The insurance agent should know if you've done updates to the roof. Have you done updates to the plumbing, to the heating, air conditioning systems? Has there been electrical work updated? Has the panel box and all been updated? They need to know what the construction of the building is. Is it frame? Is it concrete? What other construction it might be? There are some insurance companies that will say that that's built with a product called Hardy Plank, which is a concrete siding, actually gets a better rate than something that is all wood frame. They want to know the distance to the fire department. They want to know if there's sprinklers. Do you have alarms? Claims history. And on some companies, their algorithm will also include credit scoring, or what we call an insurance score. They'll look at what your history has been. The longer you've been in a property, you may get a better rate. But one of the big things, and particularly with older homes, is if you have had your roof redone, let the insurance agent know. Don't wait till the insurance agency asks you. They can probably potentially get you better rates when they know that. When you put additions on a house, or when you finish a basement, let them know. There are credits and these will vary between all kinds of insurance companies, but there's a new home credits. So you might get a 15% discount because it's a new home, and that declines over time. They'll give you a credit because you purchased a home or you purchased the insurance 10 days, 2 weeks before you needed it. There might be a paid in full discount. Some professions actually get credits. Many insurance companies will give credits to engineers or doctors, school teachers. Always ask to make sure you're getting the credits. You will also get credits for combining it with and we have situations where we'll write an auto policy and a tenant homeowners policy, and the tenant homeowners policy is actually almost free because of the credits the auto policy gets for having both of them with the same insurance company. If you own your home and you have a mortgage, most of the time the lender, the bank or other company that you've borrowed the money from, is having you pay monthly into an escrow account as part of your mortgage payment. The bank and lender will also pay for property taxes out of that account. They also pay the insurance premiums out of that account. So that does not mean you cannot move from one insurance company to another. It just may cause you to start on it a little bit earlier so that the proper billing can be in place. There are a couple things I'll just mention while I'm still talking about homeowners. I've been doing this for a while, and I can tell you that absolute nothing you can do is as helpful as going throughout your home and taking photos of everything. Go into each room, open up the closet, open up the drawers, open up the cabinets, take pictures. Date the pictures. If you've got, most people can do it on their phone anymore, but take those pictures. The insurance company, in the event of a claim, is going to ask you to complete what's called a sworn proof of loss, and it's an inventory documentation. And having the photos of everything that you want to claim I can't tell you how helpful that's going to be. Check your smoke detectors twice a year. Make sure they're working. We will normally tell people to do that when the time changes. Make sure you've got fire extinguishers that are up to date. Make sure you know how to use them. Housekeeping and regular maintenance are critical to homeowners policies. The insurance companies will send out people to look, and they want photos front and back of homes. Common sense is very important. Around Thanksgiving, people start making comments about deep frying a turkey. Well, if you deep fry a frozen turkey, it's going to react, and just make sure it's done away from the house. Make sure your grill or whatever is away from the house. Couple extra thoughts. Flood coverage is not included in a homeowner's policy. Some of you may live in a flood zone. Talk to your insurance agent about it. Earthquake, certainly some of you may be in an earthquake zone. Some areas of the country, whether they be in the Midwest or on the coast, may have wind and hail that they need to be concerned about. Some insurance companies will put a separate deductible for wind and hail. And I have seen here in Virginia, some insurance companies, and we don't have any that are doing this, but they'll take the home and put a wind deductible on it so that if a tree falls on your house, if your house was insured for $500,000 and there's a 2% deductible, your deductible just became $10,000. And I've seen people learn that the hard way. Automobile insurance. Automobile for the general public, motorcycles, RVs. Automobile is where you have the potential for actually hurting somebody badly quickly. And it can happen very, very quickly. You know, we've all seen situations where we're at a stoplight and all four people at the stoplight or at all four corners, they're on their cell phones. You know, and most states have laws against being on your cell phone now. Liability insurance claims have gone up significantly because of this. So on an automobile policy, there are going to be 5, 6, 7 different kinds of coverages. Liability insurance is what I'm talking about here, where we pay for bodily injury and property damage to others because of our negligence. Just like the homeowner's policy, if you end up being sued, we will hire an attorney to defend you. And just like the homeowner's policy, if you injure somebody who is a minor, the amount of coverage you buy today is what's going to be used to pay that claim in the future. And doesn't matter how far out it is, the injured child hits majority, plus the statute of limitations, plus the length of the trial. And I've actually seen this happen over time. Some insurance policies will be written on a split limit, meaning that there's one limit for bodily injury, another limit for property damage, but they can also be written on a combined single limit. So to all bodily injury and property damage comes out of one limit. There is a medical payments feature so that anybody injured in the vehicle, regardless of who's at fault, can get their medical bills paid. This amount might be $2,500, $5,000, $10,000, depending upon what somebody purchased. And then it will vary by state. Some states have a personal injury protection coverage, similar to med pay. It'll pay for medical bills up to a certain amount, regardless of fault. And it will pay for a little bit of wages. In Maryland, the state nearest to me that has this, usually this is going to run about $2,500 of coverage. 2 additional coverages are physical damage to your vehicle. You're not required by law to have these coverages, but you may be required by either a lease or a lender to have these coverages. And for many people, the potential biggest investment they've got is their car, and they want to insure these. These coverages are normally written on what's called an actual cash value basis. I mean, it's the cost new less depreciation. As soon as you drive a brand new car off the lot, it probably goes down in value about 20%. And that's going to go down every year. But some insurance companies, if you ask, they have a replacement cost program where they will either buy you a new vehicle or they will buy you one that's 1 or 2 years newer than the one you had. If you take a loan out on a car that is 4, 5, 6 years in length, you probably owe more on the car than it's worth after you've taken it off the lot because of that depreciation, and buying the replacement cost of, or similar form could be very important to you. A little while back, we had somebody get a brand new vehicle on a Friday, and it was a total loss of the vehicle on Sunday. And we had the replacement cost on there, so they got a new vehicle. So sometimes this being upside down, if you have leased the car, they will sell you gap coverage, but this replacement cost can help make up for that, what we call the gap when there's our leases and loans that have a longer duration and you put little money down. The two actual physical damage coverages, one is comprehensive, or some would call it other than collision. And this pays for animal. You hit an animal, you have glass breakage, there's flood, there's hail, theft, vandalism. In many areas, there's been theft of catalytic converters over the last couple of years. And so you walk out to your car and somebody's cut the catalytic converter out from underneath of it. That's a comprehensive claim. During COVID, a lot of cars had damage from rodents, mice, squirrels, chipmunks were eating the wire harnessing in vehicles. Vehicles weren't moving. And that's a comprehensive claim. Many insurance companies, if you have a ding on your windshield and you have a deductible, but it's able to be repaired rather than replaced, they will repair that windshield for free rather than hitting you with a deductible on it. Collision is missing the deer and hitting the telephone pole. Oftentimes it has the same deductible. Or you hit another vehicle. You could even hit your own home. Collision. And when your vehicle is damaged right now, you call the body shop. I had somebody last week. You get to go to the body shop of your choice. They called the body shop, and the body shop was not able to make an appointment to see the vehicle for 6 weeks. So they couldn't get an appraisal for 6 weeks. And then they were told that it may take 2 months to get all the parts. Now, the car was drivable. So when the car is drivable, we'll tell somebody, please, and this is very important, wait until the body shop that you want to use knows it has all of the parts. Rental car coverage generally may not last more than 30 days. And we see many repairs where somebody might be in a rental car for more than 30 days and the insurance company won't have any additional funds to pay if you use all that 30 days up. And so it'll be somewhere between $30 and $50 a day they'll pay for the rental car. But I am talking with my staff on some ways to increase that. You can also have insurance for towing. The vehicle's disabled. You can have the vehicle towed to a shop of your choice, and the insurance company will pay somewhere $50 to $100, depending upon what you buy, to have that towed in. Discounts are important in automobile insurance, and what drives the price. Uh, Multi-policy discounts. So pairing your homeowners, tenant homeowners, condominium unit owners policy with a auto policy will save credit or save prices on both of them, the home and the auto. 10-15% on each one, depending upon the insurance company. Multi-car. If you have more than one car on the policy, they'll give you a discount. Some insurance companies will give you a discount for paying the full annual premium. They are now putting in what's called telematics. You put an app on your phone and you keep the phone with you, and the app is able to tell braking, fast starts, fast turns, what time of day you're driving, but they'll give you discounts for allowing them to monitor your driving habits. And depending upon the insurance company and how they set it up, there will be additional discounts available. Advanced purchase, I mentioned before, you buy an auto policy 2 weeks in advance. Rather than calling up and getting it today, they probably give you a discount for that. Good student credits for children, loss-free discounts, the type of car, where you live, how far you commute, your driving record, your accident history. And depending upon the insurance company, some of them look back 3 years for driving records and accidents. Some of them look back 5 years. And every insurance company does things a little bit different with youthful drivers and how they're going to charge on that. The insurance companies are going to check databases. If you have non-related people who live with you, they may check databases and find out that utilities are being paid in somebody else's name out of that same residence. And we have to address that with the insurance companies from time to time. So very, very similar to the auto policy is the motorcycle policy. It works the same way, but it's a separate policy. The same with a recreational vehicle. It works the same way. Some people have golf carts and they take them on public streets and they have to be licensed. There's a policy that works the same way for golf carts. There's another policy for boats and jet skis and similar type of items. So all of these policies have a as you've heard me mention several times, something we get asked often and we try to recommend is that somebody purchase an umbrella policy. So underneath that umbrella, and we're not advertising for any particular company there, under that umbrella goes the homeowner's liability, the auto liability, the golf cart liability, the boat liability. And it gives you extra 1, 2, 3, up to several millions of dollars of extra liability coverage. And when there is a situation that somebody does not have sufficient coverage and they do get sued and they're asked for more than the amount of coverage that you have, the insurance company is going to send you a letter. They're going to send the agent a letter that you've been sued for an amount in excess of the amount of coverage you have. We suggest you hire an attorney at your own expense to protect and monitor the claim in excess of the amount we have. We're going to defend you up until the limits you have. But depending upon somebody's assets, they may want amounts higher than this. And I've got one of these claims going on right now. Person had $1 million of coverage, but they got sued for 3. They did not accept that coverage when we offered it to them. They now have higher limits of liability should something happen. Distracted driving, youthful drivers, claims happen, and the cost to repair a vehicle, the cost to replace a home, these are the prices on these things are all going up at rates we haven't seen in years, and as a result, people's premiums are going up, and it's not to be unexpected, but it causes people to be prudent shoppers and make sure they're getting what they need in an amount that they should have, and they're getting, more importantly, all the discounts that they should be getting. So last thing I'll mention to you is, how do I know what insurance company? Everybody has a favorite insurance company. Many people insure themselves with the people their parents were insured with, for no better reason than that's who their parents told them to get. But there are what's called captive agents, and there are independent agents. And captive agents usually are employed or only have contracts with the carriers that they represent. That might be State Farm or Allstate or Geico. That's the insurance company those people work for. An independent agent will have contracts with many different insurance companies and can mix and match and shop internally for you, so that as people's lives change, they can put you with the company that's most appropriate for you. Not that these other companies are bad companies. I'm not saying that at all. They just don't have as much choice. And as people go from youthful drivers to married to having teenage drivers to older drivers, different companies have different appetites. Some companies like older homes. Some companies like homes that are more rural. Some people like you to be brand new and within a mile of the fire department. They all have a niche, and our side of the table, we try to match the carrier's niche to our customers' needs. And so I'll answer any questions that I can. My practice is in several different states, so I may not be able to answer some questions, but I'm happy to assist to the best of my ability.
It looks like a question came directly to me, and
Okay.
that was, should a driver with a permit be added to the insurance policy?
We will see that's an interesting question. We will let the insurance company know. I think it's always better that they know. The insurance company may not actually charge until they've gotten the full license. But believe me, the insurance company probably already knows how many children are in the house and what ages they are. It's just databases. I find it's better to go ahead and let the insurance company know so that they're aware. And it's good for us to know, because I may not know in our agency, and rather than be surprised, we can be making sure we've got you with the most appropriate carrier.
David, what's your opinion on shopping around? You always see those commercials for all different insurance companies wanting to shop around. How often should we take a look at what we have and think about shopping around?
insurance companies change over time. And the carrier that you're with now may gain excessive rate this year. So here's what I can tell you is that just to make the math simple, if you insured a home for $100,000 and every year, and you've been with that insurance company for 10 years, and every year they've been using a 4% inflation guard on that policy. Every year they are compounding 4% on top of that. The cost to replace it may not have gone up 4% every year. You're paying an increased premium on the home, on the contents, on the other structures, on the loss of use. It is my belief that a costimator, a replacement costimator, should be done probably every 3 years to make sure you're not overpaying, overinsuring the home. Now, this year, those 4% numbers, as I said, insurance companies are taking anywhere from 6 to 11% plus rate. So if they increase the value of your home 11% and they take a 5% rate increase, well, your homeowners just went up by 16%, and the bill went to the mortgage company, and the mortgage company paid it. And you may not have really paid attention to it. And if that happens multiple years in a row, you need to look at it. Most agencies are proactive about that kind of thing, but many of them they'll accept a 10% increase unless you ask about it. We actually work at a lower threshold, and we'll shop internally to move somebody because they're getting a better deal.
All right, so I've got some other questions in here. How about when renting cars, they offer insurance? Should we accept, or will current insurance company cover the liability?
Good question. So here's what I'll tell you. The rental car contract is not a contract of insurance, and it varies in every state. And most people don't read the back of that page, and the rental agent has never read it. Okay, I can't say never, but they probably haven't read it. If you have comp and collision on your car, and you want to verify this with your agent, the liability coverage for a temporary substitute automobile is going to come from your automobile policy. So if you had $300,000 combined single limit and coverage on your auto policy, that should follow to liability coverage, bodily injury, property damage to others that you cause out of your negligence. The physical damage coverage, if it's a temporary substitute and you had comp and collision on your auto policy, it should follow. Check with your agent. Now, if you don't have comp and collision on all your vehicles, you definitely want to check with your agent. But here's what I'll tell you. That rental agreement is going to say different things. And it may say that you're also responsible for that rental car company's loss of use while that vehicle is being repaired until next rented. Who gets to decide when it's next rented? They do. You don't get to decide that. So when I travel, and some agents will disagree with me, but here's what I do. I have comp and collision on all my autos. I do not buy the liability coverage they offer. because I have high limits of liability coverage. I do buy the collision damage waiver. Okay. Now, when I go back to the airport, I want to just hand the keys to that person, and I want to be able to walk to my gate and not worry about that car. I have somebody who just last week was in California, and I'm not picking on California, but their vehicle in San Francisco was broken into. Window was busted out, and they did not buy the collision damage waiver. They're using the coverage from their own automobile policy to pay for that. And it could get a little bit sticky. One, your insurance company may not do business in the state that the accident happened in. If I buy the collision damage waiver, I don't have to worry about it. I just walk away. Does it cost me a little bit more per day? It will. But that is what I recommend. Sometimes people will use a credit card that gives the coverage, but then next week you might get something from your credit card company where they've changed what the contract and what the credit card automatically gives you.
Happens all the time. All right. So
rental car companies are actually saying now, don't lock the car. Leave it unlocked. Take all your stuff out of it. If you lock it, they're going to think something's in it, and they're going to break the windows.
Looks like there's another question here. Do you recommend having the mortgage company pay the insurance, or should the homeowner pay it directly?
Most of the time, the mortgage company won't give you a choice. It's part of the escrow. It's part of the what you agreed to when you took out the loan, that this escrow account was going to be there. If you own the house outright, then of course you're going to pay the premiums yourself, and you can put them on a monthly installment or however you want. But we don't normally see where there's any choice. The lender is going to tell you what they're going to do.
So let's see. I think that was the end of the questions. I'm seeing lots of thank yous for your time, and thank you for the great information. You know, I learned a lot. So if there aren't any other questions, you can feel free to come off mute and just ask a question if you'd like. We'll give it a few seconds here to see if anybody else had a question.
I think I just saw something pop up.
Let's see. Okay, yes. Is there any downside to changing the insurance policy when you have a mortgage? That's a good question.
No. We see there's no downside at all to it. We do see situations where a builder will own an insurance operation, and they quote it or a real estate operation might have an insurance operation, and they automatically refer you to those people, combining it with whatever works best on most people are going to have a car to get the best discounts available. And best coverage for yourself is what's important. There's nothing wrong with changing that. You just want to make sure you try to do it in time. And if you don't do it in time, the wrong insurance company gets paid. We cancel that policy, and the premiums get moved around to satisfy everybody. Usually, you're saving money.
Which I'm sure in this environment right now, we all would like to be able to do. All right. Well, thank you all for being here. Thank you so much, David, for presenting. This was really
Welcome.
great information. And David's information is here, but I'm going to quickly mention that our next section of insurance is going to be on June 22nd at 1 p.m. and we're going to talk about life insurance. Also, don't forget about our helpline if you have any questions that you'd like answered that way. I did see a few of our volunteers on this webinar, so that's amazing. And they are here to help you. So thank you all for attending and enjoy the rest of your day.
Thank you.